So strikingly, we're in the Guiseley Factory Workers Club, a town where there are no longer any factories, which I suppose leads me to ask, do you think this is a sort of temporary crisis, or are we seeing a significant long-term reorganisation of the economy?
I think, Robert, there's a very good chance this crisis will give the hurry up to some of what were already pretty deep-seated structural trends in the economy even before COVID. So the shift towards a more digitized way of doing business, plainly COVID's given a significant hurry up to all of that.
So some of the homeworking, for example, that might be permanent.
I think that will, for some people, prove to be durable. I think the reorientation of business towards a more distributed, digitized business model.
So there's been a boom in online sales. You'd expect a lot of that to stay.
You know, we've seen that's a very effective and often cheaper medium for a great many businesses, and indeed a great many consumers as well. So I suspect, you know, having moved into that world at pace, people want to probably stick very largely with that world.
Are there businesses that will simply bounce back and, you know, nothing would have changed?
Well, already we have seen something of a bounce back by a great many businesses, and indeed by the economy as a whole. You know, perhaps we had a output falling, a quarter, say, in the first half of this year. We've probably already clawed back more than a half of those losses. The bounce back has started. It started 3 or 4 months ago, and I fully expect that to continue, hope it to continue, over the next few months. I mean, it's very important for those businesses that they can have confidence that demand for their product, for their goods and services, will continue. And that's why, you know, monetary policy is still in overdrive, with borrowing costs still at very low levels. And that's why government policy, fiscal policy, is still providing huge amounts of support to the economy as well. We're in a very unusual situation right now, in which, you know, the short run will shape the fortunes of the economy over the longer run. By supporting demand in the economy today, we can avoid those scarring effects which would trip up the economy over the medium term.
So when do you think we'll actually know which jobs, which businesses are simply not sustainable anymore?
I don't know there'll be a light bulb moment on that front. I think already you could think about those businesses that will need to reinvent themselves fairly fundamentally to survive and thrive in this future world. Yes, the travel sector will need to think afresh about its business model. Yes, parts of the hospitality and leisure industry will need to think afresh about their business model. Yes, great swathes of the retail sector need to think afresh about how they most effectively function. I think we're seeing some of that transition already underway, and doubtless there is more to come. So this will be a case, I think, of playing it a little bit by ear. But already we see which sectors have been hardest hit and will find it hardest to recover their previous position.
So just to be clear, even if we find an effective vaccine, some of what has happened, and some of it's leading to people losing their jobs, some of that will simply not be flipped back. It won't simply be reversed.
That strikes me as extremely likely. I mean, let's take the high street, retail businesses. Even before any of this, we saw many high streets, many shops under pressure and gradually losing their way. COVID has given that a really significant nudge, and it's nudged many of those businesses, you know, over the edge, which is a great shame. But in some ways, perhaps for at least some of those businesses, that would have happened at some stage anyway. I mean, for me, the key thing then is how you respond to that, to not allow that shakeout of jobs and businesses to have a lasting impact, say, on workers.
So if this, at least in part, is about taking the so-called fourth industrial revolution, which was supposed to take, 5-10 years, and it's now been, concertinaed into a few months, what should government, Bank of England, anyone who's got the influence, do about all of that?
Well, as in all previous industrial revolutions, they come at a cost. They have a big benefit, which is a shift towards a more efficient and effective and productive way of doing business. And that's good in the longer term because it boosts pay packets and boosts jobs, but does come, as in the past, at a short-run cost.
And so the people who lose out in the short run, we've seen that in previous episodes of Economic Change. There are winners, but those people who lose, quite often they lose forever.
And that's what's to play for, I'd say. So we know from crises past, from recessions past, 1980s in the UK, early 1990s in the UK, global financial crisis, that if you're not careful, those that are displaced from work for whatever reason can find their skills, depreciating over time if they cannot find new work quickly enough. There's a long-term scar left, if you like, for the individuals, for their families, for communities, and for the economy, if people are allowed to remain unemployed for too long a period. That's
one of the things that's striking to me is if you go back to the 1997 general election, the Labour Party was elected in 1997 on a platform then of promising to help those, many of whom had lost work in the 1980s.
Yeah.
It was about retraining people who'd been out of work for more than a decade.
Yeah.
And it was a powerful and popular programme.
Yeah.
Are we looking now at 10 years of people being lost, effectively?
Well, I hope not. And the experience, I think, over the last 10 or 15 years is that the jobs market here in the UK is functioning rather differently than it did in the 70s and 80s and perhaps even the 90s. Back then, often what you found at times of stress is that the first thing to go was jobs. People's pay was preserved, their hours were preserved, but jobs were lost. What we saw 10, 12 years ago, at the time of the global financial crisis, was that the slack was taken, the burden was borne as much in pay or in people's working hours as in jobs. Greater flexibility in the world of work.
It was tough for people, but it wasn't as bad as simply losing all employment.
That's right. The burden was, if you like, more evenly spread across employees. Now, there's no question that some jobs have already been lost in the UK, that some more will be lost in the second half of the year. What's to play for is to avoid that leaving a long-term and too deep a scar. And that means, an intensive program, governments, businesses, and workers, a social contract that retrains and reskills and rehabilitates those workers, whether young or old, to equip them for the jobs of tomorrow, which there will definitely be.
But this is hard stuff. We've got, for example, a so-called Kickstarter scheme where the government is giving companies quite a lot of money to take on young people and train them in new skills, new jobs. The government has said these jobs have to be real and lasting and not simply nicking a job from an older worker.
Yeah.
But actually, the bureaucracy involved whenever you do something like this is challenging. If a business is just struggling to keep going, taking on new young people, training them up, that's hard. For civil servants, making sure that this isn't some form of fraud by a company when they're handing money over is hard. Which is a long way round of saying, we know what we've got to do. We've got to retrain people of all ages for the work that's going to be there. But it's not easy.
It's very far from easy. In the past, these adjustments played out over years, over decades, over centuries sometimes, whether it's textile industry or the coal mining industry or any heavy industry. It took a long period to transition. We do not have this time, the same luxury of time. And actually, I've been quite reassured during this crisis how quickly governments and central banks have responded, how quickly businesses have responded in reorienting their business models and business practices, and indeed how quickly workers have adapted their way of working, whether it's working from home or working flexible hours. So I've got some hope that the searing experience of the COVID crisis may have flexed that muscle, the ability to change at greater pace than in the past. And surely that's what we'll need, whether it's designing government schemes or reorienting business models or reorienting the way in which we work.
Do we have schools that are giving people, young people, the skills, the ability to adapt that one would want?
Well, my sense is, the British schooling system has done a fantastic job over the last 250 years, in particular in developing academic skills in young people. But the model that's worked brilliantly for the last 250 years will not be fit for purpose for the next 50, which will, I think, require us to develop skills well beyond the academic, the interpersonal, the vocational. Those two elements will become even more important for the future world of work. And also, it won't just be in young people. All the rhetoric about lifelong learning, we will need to, over the next 10 years, make a reality so that learning, education, isn't just something done in academic subjects to young people, but is broadly based in terms of skill set and is broadly based in terms of who gets it.
Now, one of the things that the government has done, I don't know if this does make sense, but I think for one of its schemes, it's paying £2,000 to companies to take on a young person and 1,500 quid to take on an older person. But actually the cost to an older person of losing a job mid-career can be huge. I mean, there are some people who lost their jobs in the 80s who never worked again, or not in any meaningful way. Do you think it's right to, in a sense, put more of an emphasis on helping young people in this crisis?
Well, I do think if you look at the evidence, those hardest hit by events like this, recessions, depressions, are the young. And the reason for that is because they're at the stage of putting their first foot ever so tentatively on the rung of the jobs ladder. And if that rung doesn't exist or breaks on contact, that can set them back in income terms, in skills terms, in experience terms, 5, 10, 15, 20 years. So focus on the young, I think, makes lots of sense because the cost is borne disproportionately by them, and this crisis will be no different in that respect. The government's Kickstart scheme focuses on those 16 to 24 for just that reason. Equally, I mean, you are right that in the new world of work, it won't be a question of a third of your life in education, a third of your life in work, a third of your life in retirement. Maybe not us, but today's younger cohorts, we're working perhaps until they 60, 70, 80, perhaps longer. They will have genuinely 60 or 70 year careers perhaps. And that will require not just a change of job, but perhaps several changes of career during the course of their lifespan. Currently, we are ill-equipped to re-skill and retrain those older generation of workers. And that needs to be a greater focus, both educationally and training-wise, as we move forward and make a success of the fourth industrial revolution.
I mean, the cost to date of limiting the economic harm from this awful virus has been huge. And we are already at a level of national debt, 100% of our national income, that we haven't seen since the early 1960s. There are some who worry about the affordability of all this debt. We're obviously going to have to, if we go to the next phase, for helping people acquire the right kind of skills, helping businesses create the right kind of facilities. It's going to cost a lot more money. Very difficult to see how debt can come down anytime soon. Should we worry about the amount that we're borrowing to get us through this crisis?
Well, I mean, for me, one of the great merits of how this crisis has been dealt with relative to, say, the recessions of the early 80s and early 90s in the UK has been that both government policy, fiscal policy, and central bank policy, monetary policy, has been serving to lean against the recession, providing support to the economy through increased spending, through reduced taxes, through lower borrowing costs. Back in the early 80s, when unemployment in the UK hit 3 million, 12% unemployment, that's because a hit to the economy was being compounded by very tight borrowing costs and government policy that was withdrawing money from the economy. And that made a difficult situation even more treacherous. We have learnt our lesson from that experience, that unemployment isn't a price worth paying. And that gives me reassurance that the extra spending by government during the course of this year, the extra support that the Bank of England and central banks globally provided, is the right thing to have done, saving probably many millions of jobs and billions of pounds of income. You're right, at some stage, you would want the economy to have found its feet, to have rehabilitated, at which point that support, both fiscal and monetary, can be withdrawn. The economy is growing. And it's ultimately by growing that those debt problems, whether it's for the government or for the private sector, can be dealt with. For me, this is debt problems are grown out of by putting the foundations for growth in place.
So just to be clear, if we go back to 2008, 9, 10, there was a consensus. It's what the then relatively newish leader of the Tory party thought, David Cameron. It's what the governor of the Bank of England at the time thought, Rowan King, that if we didn't curb what was then thought to be a large deficit, there would be a financial crisis. Now, the deficit this time is twice what it was then. Was it just that those people were wrong?
Well, things have moved on over that period. And one of the most significant things to have moved on is the cost of borrowing by government. Despite, debts and deficits globally picking up, we have seen the cost of borrowing by governments heading not north, but south. In fact, the cost of borrowing among governments in most economies are at historically low levels right now. Investors globally are very happy to purchase the government paper that's been issued in size over the course of the last 6 months or so. And if those borrowing costs remain at their current very, very low levels, that makes those debts and deficits eminently more affordable than they would have been even 10, 12 years ago.
But for most people, this simply doesn't make sense. I mean, the sort of common sense view 12 years ago was that if governments borrow too much, their creditworthiness looks worse and they'll have to pay more because there's more risk attached to lending to those governments. But actually what's happened is the debts of government have risen very considerably, and yet they're paying less than they were to borrow. How do you explain that to people? I
think two things are relevant here, I would say. One is that at a time of great uncertainty globally. We've got pretty much every person on the planet facing this double jeopardy right now, Robert, of health risk on the one hand and economic or job risk on the other. At those times of acute uncertainty, there's a understandable search for safety, and it remains the case that government assets, government paper, is the safest asset in town and creates a ready demand for those assets, which pushes up the price and reduces the cost of borrowing. I think there's also, though, and this is the second important point, a recognition that with borrowing costs being so low, there are prospectively very high returns to investing right now, investing in bits of digital infrastructure, investing in people's skills, that they will deliver a payoff over the medium term that supports growth and therefore pays down that debt. I think both of those factors are relevant in explaining this conundrum of higher debts but lower borrowing costs.
I mean, since you talk about the impact of low interest rates on, for example, propping up stock markets, and we saw a sort of stock market crash very briefly at the beginning of this crisis, but they're now hitting highs again. One of the things that happened in the 2008 bailout is because so much of it was focused on creating lots of new money, cutting interest rates, we saw a surge in house prices, in share prices, and certainly in wealth terms, you saw a widening of the gap between rich and poor. And one of the worries is, particularly given people are losing their jobs, that again, as a result of a crisis, and indeed the way that we're trying to solve this crisis, there will be a further widening in the gap between rich and poor. Is that something you worry about?
It is, and we're right to worry about that. But there are some important points in mitigation there. And one of them you mentioned, Robert, which is that nothing widens the gap between rich and poor more than unemployment, than joblessness. So for me, having looked at this in quite some detail at how we responded with monetary policy to the global financial crisis, yes, our response boosted asset prices, but it also kept somewhere between 500,000 and 750,000 more people in work. And that meant overall, all told, the actions of, say, the Bank of England back 10, 12 years ago didn't widen the gap between rich and poor. If anything, it shrunk the gap by keeping many more people in work than would otherwise have been the case. And for me, that is the key criterion now as well, that above all else, the crisis response, be it from governments or from central banks, has been about keeping people in work, because the long-term scarring effect of that is just so great.
Is there a single big thing that matters to you more than anything else in terms of keeping unemployment down? Or are we really looking at quite a sort of complicated range of different measures?
I think if there were a silver bullet singular solution right now, we'd have long since found it and implemented it. And if it exists, it's escaped me for 35 years and counting. So I suspect it isn't one thing.
But what are the things that work then, if there's no one big thing?
Well, I do think the skills agenda is absolutely front and center here. If you care about people being in work, doing good work, purposeful work at a good wage, they need the skills to survive and thrive. And right now, I think along some dimensions, the UK does a brilliant job in equipping some of our younger and older people with the skills they need to survive and thrive in the world of work, particularly at the higher end of the skills spectrum. Let's call them the 50% of our young people who go to university. I think for the 50% who don't, who aren't on the skills high road, but who are instead on the skills low road, we do a much less good job of equipping them with the skills they need to survive and to thrive. That is often a different set of skills than the academic ones. It speaks more to those vocational and interpersonal skills that I mentioned earlier on. We've invested hugely and very successfully in higher education, but the poor relation has been our further education institutions, the technical colleges in old language, the apprentice programs. So I think that is the place we need to look if this gap between those on the higher road and those on the low road is not to widen even further as a result of this COVID crisis.
I mean, a number of years ago, you did some important work looking at the UK's historic productivity problem, and what you identified was that actually in this country we have a limited number of absolutely world-class businesses, among the most productive in the world, and then what you called a long tail of, basically very subpar businesses with incredibly low productivity. Is that skills gap a sort of reflection of, or is it the other side of the same kind of coin? Is part of the British disease, as it were, that we're very good at educating an elite and just rubbish at doing the rest?
I think it is the other side of the coin. So I think that we have a set of businesses on the productivity high road and a long tail of businesses on the productivity low road. That is the mirror image, both cause and effect, of having a set of workers, some of whom have frontier skills, high-level skills, tending to work, guess what, in those frontier businesses. And a long tail of workers with lower levels of skills that tend to work in that long tail of lower productivity businesses. And guess what? What's true at the level of business and at the level of workers also has its, as a side effect, the differences we see regionally. Because those frontier businesses with their highly skilled workers tend to operate in the better performing parts of the UK. And the long tail of low productivity businesses with lower skilled workers tend to locate themselves in some of the less well performing parts of the UK. So whether it's the business divide, the worker divide, or the regional divide, they are three sides of the same coin. Because of course, contrary to popular belief, coins have three sides, not two.
You're absolutely right. Unless it's a sort of nano coin.
That's the nano coin coming soon.
We've talked about skills, but of course, even if people have the skills of the future, you've got to have the businesses of the future. Can the government trust the private sector to create those businesses of the future, or does the government have to get more involved in sponsoring, investing in, even possibly simply creating the businesses of the future?
I spoke earlier on about the new social contract, new social compact between government and business and workers. You could lump some more in there, like trade unions and local authorities, if you like. But I think as part of that new social compact, it's absolutely right that we think about government, not instead of, not in substitution for, but complementing the efforts of business in thinking about where the jobs of tomorrow, where the businesses of tomorrow will reside. I look elsewhere around the world and I see governments there forming views, taking big bets.
Investing in
the industries of tomorrow over a long-term period.
Because in this country, there's been a view that governments always get it wrong when they invest in businesses. But you obviously think that's wrong.
Well, I mean, I think historically in the UK, we've probably got the wrong side of the line when it comes to picking winners on the one hand and supporting losers on the other. You know, for a long time, industrial strategy in the UK was about the second rather than it being the first. When I look elsewhere around the world, it's very much mode one. It's looking, forming a view of, and putting money where your mouth is, a set of sectors that plausibly will be big repositories of jobs and activity and productivity in future. It's not
so the government shouldn't be frightened of identifying, picking, and then backing winners.
A key part of forming and framing economic policy is forming a view of what happens next in the economy. That's true in my day job, when I'm forming a view of jobs and inflation in the future. And it's true when you're thinking about the future structure of the UK economy. What are the sectors that, with the best will in the world, are in decline? And what are the sectors that will grow to replace them? And how do we traverse between the two? How do we ensure, as painless as possible, a skills transition from old industry to new? Now, those transitions are always difficult. We know how difficult it is ourselves to learn new skills. But they're absolutely fundamentally important to lifting the spirits of the individuals, lifting the pay packets of those individuals, giving them secure work at a high wage in highly productive businesses in a way that then deliver these wider benefits to the economy and society.
Which kinds of businesses are going to thrive?
Well, I think you look to some of the mega trends that are underway globally. One of them is, of course, the onset of greater amounts of automation and artificial intelligence. That is already a hugely growth sector. It will become more.
But that's destroying jobs.
It need not. So here is I think a common myth, which is that machines are always job killers. They haven't been in the past, and there's no necessary reason why they will be in the future.
But if you're, in a factory and a robot's taken your job, what are you going to do?
Well, I've been to factories where robots have taken some of the old manual jobs, and the more foresighted of those factory owners have then retrained rather than made redundant their staff to operate the robots and to do some other things besides. So yes, it's certainly possible that there will be some loss of some jobs doing some sets of things. But there's no reason to think that necessarily sounds the death knell for the worker, provided that worker can be retrained and reskilled to make best use of that new technology. That's where there's a gap right now, because when it comes to digital skills, the UK starts with a significant deficit. Perhaps half the workforce do not have the digital skills they need to best perform in the world of work. And that gap will get bigger without some remedial policy action. If that action was taken, I don't think the rise of the robots will come at a great loss in terms of jobs. In fact, if anything, a skilling up agenda would give people more secure work at a higher pay.
We're all desperately trying to see the glass half full rather than half empty in rather challenging times. There was a view for years that the West was basically finished. We were, our fate was to be low growth as, the newer economies grew and grew and grew. But if you look back in history, when you have really extreme shocks, actually the rebuilding often allows, really quite exciting regeneration. Is there any chance that this profound shock, which may be accelerating an inevitable industrial revolution, will actually put us in a place where our ability to grow is better than it was?
I think that's what's to play for. I think the future of our economy, of our society, is ours to make, as it has been in the past. As you say, at times in the past, particular times of societal and economic stress, that has been the catalyst for lasting structural change, or what we might call the supply side of our economy. It is a time for national renewal. I mean, the lingo often used now is building back better or building back greener. And this crisis provides the opportunity to rethink our approach to business, our approach to industrial strategy, our approach to skills, our approach to digitization and AI. And it's for us to seize that opportunity, as it was at the end of the Second World War. The truth is, and you know this, and I know this, there's no great secret about what the UK does well, or indeed about what the UK does less well. The fault lines were very clear pre-COVID. If anything, the COVID crisis has widened those structural fault lines. What better time than now to put in place an economic plan, a strategy that closes those structural fault lines once and for all? Very important right now for people out there who are understandably deeply uncertain about their jobs, about their incomes, about their families, about their communities, that they are given some sense of that plan. There is...
I mean, because one of the things everybody says at the moment is this is the worst time to be a young person. But you are saying, paradoxically, that this could be the best time to be a young person.
I think if you were thinking right now about could I build the business of tomorrow with a cleanish sheet of paper that transforms the way we think about AI and digitization, then now is a time of great opportunity to rethink business, to rethink work afresh. And it's tremendously important collectively we have that spirit of optimism. One of my real concerns right now is that the news is full of rather gloomy stories, whether it's about health risk or about economic risks. Those risks are real. But equally, I wouldn't want that sense of pessimism to drown out someone investing in new skills, in new businesses, because that's ultimately what will drive growth and jobs tomorrow. It will be self-fulfilling in driving growth and jobs tomorrow.
We've been living through a period of huge movements of money and jobs all around the world to places where it's thought that investment can be most efficiently deployed. We saw over decades enormous numbers of jobs, for example, going from Britain to China. It's what we call globalisation. One of the things that we've seen in this crisis is the risks of globalisation. So when the virus hit, lots of businesses simply couldn't get the parts they needed from China or the rest of the world. And we suddenly realised, gosh, allowing all that manufacturing capacity, all those jobs to go abroad, well, that's quite dangerous. Do you think that we're now into a phase of some reversal of globalisation? Jobs coming back?
I think even pre-COVID, we saw globalisation, if not in retreat, then under threat. And that COVID has amplified that, as we've seen global supply chains fracture, in some cases break. We saw those supply chains built up over many, many decades and then almost switched off overnight. And that's an important lesson from an economic policy perspective. Very similar to the lesson we learned 10, 12 years ago when it wasn't global supply chains, but global credit chains that were being broken almost overnight. For me, Robert, that doesn't mean we could or should be turning our back on globalization. What it does mean, though, is that we might need to build some domestic capacity for at least those goods and services which we can't do without.
So does that mean more manufacturing jobs here?
I think it might involve, for some goods and services, more domestic production of some goods and services. Not necessarily as a substitute for imports, but as an insurance policy, as a backup for those imports in the event, heaven forbid, that global supply chains should fracture again in future. So for me, this isn't and shouldn't be sounding the death knell for globalisation, but it may require a reframing, a refashioning of the global market for goods and services, for monies, indeed for peoples, so that national economies have the resilience they need for some goods and services, from masks to vaccines.
This health crisis is a global crisis. Does that mean that ultimately the solution economically has to be a global solution, or do national governments have more power than we might imagine?
I think we've seen during the course of the crisis the power of national governments to get things done that, had they had to be internationally coordinated, would not have been done otherwise. Such was the speed necessary and scale of the action needed. I think we were rightly heavily reliant on national governments, as we were at the time of the global financial crisis too. But does this mean, therefore, that we shouldn't be putting some building blocks in place for greater degrees of international cooperation on health issues or on economic issues in future? No. I think of after the Second World War, a different type of global financial crisis. The Western world was rebuilt, partly courtesy of some new international financial institutions, governing the movements of monies, poverty alleviation for poorer countries, and human rights. We had the IMF, the World Bank, and the United Nations. And I think now is a good time to reflect on whether an existing set of international institutions are fit for purpose looking forward. There's no question that flows of monies, flows of peoples, and flows of goods and services are likely to continue. Are they as well coordinated and as well managed as they might be? I'm not sure. And if not, perhaps we need another institutional solution, as after the Second World War, to make things a bit better.